Hello and welcome to Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. As always, guys, hi. Good morning.
Good morning.
Waking up to slightly more modest and tepid kind of cues, right? And I think the thing to blame is the US Treasury market. So we got blowout moves in the US Treasury market, both across the curve, actually. The 2-year, the 5-year, the 10-year, the 30-year all moved up very strongly. 13 basis points in 5-year, 10, 12 basis points. 30-year tenor moved up 9 basis points as well, all comfortably above the 4% mark. The 2-year actually at almost 4.5%. It actually crossed 4.5%, and people are already pegging 5%, just under 5% kind of levels. No real singular trigger for this. We'll come to that in just a bit. But that is putting a lot of pressure on the dollar upwards and consequently on other forex lower. As the dollar moves higher, pairs against its trades actively, that goes lower. You saw that yesterday in the dollar rupee, that big move, 83.02 at close. In offshore markets, I think there is a little bit more pressure, so we'll see that this morning. And we'll talk more about this. Stability in the dollar rupee is key. You don't want sharp depreciation. Yesterday is one of the sharpest we've seen. Just about almost all of that fall came in just 40-odd minutes of trade. So that was pretty large. And pretty spectacular. So we want stability there, and I think equities will watch that very closely as well. SGX is indicating a lower start by about 100, 120 odd points or so. Guys, hi, good morning.
Hi, Prashant, morning. Nigel, morning. And I think that was a big talking point yesterday, right? The fall in the rupee. And I think the Nifty came off about 100 points from the highs in late trade because of the kind of sell-off that we saw in the rupee. So that's going to be tracked very closely. But don't forget the Nifty is still just 6% away from that 52-week high. So the market is still in fine fettle, although purely for today, the SGX Nifty is down about 140 odd points. A couple of things, we'll discuss more about the rupee, of course, but there was that one foreign bank that saw a large amount of dollar buying, and whether that was just a freak move or not, only time will tell. But for today, the expectation is perhaps that weakness could continue. For the Nifty, it held on to that 17,500 mark yesterday, and FI selling has been on a reducing trajectory, which is good for the bulls. Yesterday as well, FI sold just about 450 odd crores. It was more than compensated by buying from the domestic fraternity. And over the last many days, the selling has been less than 500 crores in the last 3 trading sessions. So that's a good thing. On Wall Street as well, there was a 2-day rally and that got halted. Minor losses, nothing alarming, about 100 points lower on the Dow. But the rupee is something that we're all going to track very closely today as well. Yes, there is weakness, but the ramifications that would have on equity markets is something that will be watched.
You want rupee to be stable, not fast depreciating, and expectations are important, right? I mean, if you're a foreign investor and think that the rupee is going to be sharply lower 6 months down the line, I mean, you're better off locking in profits now, right? And that is the spiral you don't want. In any case, I mean, just like equity markets, the rupee has also been the outperformer, standout outperformer amongst large economies. So let there be no doubt about that. What happened yesterday? Will the RBI come in today to defend, to douse the fire if there is another pressure once again this morning? We don't know, and those questions one cannot answer. But I think it's also important to look at what's happening in the dollar rupee in the global context. And I'll just use this as an example, use what's happening in the Chinese yuan as an example. The basic driver, the basic dynamic at play is this: yields move up, leads to dollar strength and pressure across other foreign exchange markets. So what's happening? The Chinese yuan, for example, hit a new low yesterday. The dollar yuan the cross hit a new high. The dollar against the yuan hit a new high yesterday. A sustained sell-off in the yuan is a sign of concern for global macro outlook. I'll tell you why. China is one of the largest exporters, right? Even after the slowdown, etc. What a very weak Chinese yuan does is basically it puts pressure on other economies, other central banks. Even, for example, for that matter, India, we compete against China, in exports market, and currency is a big part of it. You need a weaker currency for export competitiveness. It kind of puts pressure for devaluation in other major exporters as they seek to retain competitiveness. This is just one dynamic I'm pointing out. But what that does is, because you've got inflation which is high, you want, weaker currency basically is importing inflation for a large importer like India. So, to retain export competitiveness, you want a weaker currency, but to control inflation, you want a stronger currency. what I'm trying to say is that this forex flux and what's happening largely to the US dollar, I mean, that is complicating the policy outlook for a lot of economies around the world. And this dynamic is something which bears very close watching. For today, you want a little bit of stability this morning and nothing like what we saw yesterday. I don't think we'll see something like what happened yesterday. It doesn't happen every day. Even yesterday was, I would say, very, very rare. All right, on the markets, the Nifty here, the Nifty and the Bank Nifty, I'll just quickly run through levels. So we closed under 17,581, which is the 61.8% retracement of the fall. We closed under that level, and this morning we'll start below it once again. It's unlikely that we'll close above 17,581, but if we manage to at some point in the day, the next level to watch is 17,680, which is nothing but the upper end of the rising channel from the lows of September. But I think today what is more relevant is supports. The supports come in around 17,200 and 17,300. One is the 40-day exponential moving average. The other is the simple 20-day moving average. So this is the zone for the support. I think you'll start slightly maybe above these levels, around 17,350 or so. On the Bank Nifty, which is the stronger of the two, it's continued to move higher in a much faster pace. The upper end of the rising channel for the Bank Nifty is 40,800. And beyond that, you've got levels like 40,900, which is the 78.6% retracement of the entire fall. For the Bank Nifty as well, I think what you want to watch are lows that, the Bank Nifty bounced off from last week. And I think that those should act as good supports as well. It's going to be a lower start, but I think, it bears watching, especially because of what's happening in the currency. If everything else remaining same, the same dynamic of the market here falling less as compared to global markets on negative days may come back into play. So it may not be a bad idea to watch the space, get some stability in, and trying small long positions here once again. Nigel, hi.
Well, we got a global challenge, right, today, because Brent crude prices are a little bit higher than what we woke up to yesterday. You have the US 10-year that's moved to around 4.1%, which is the highest we've seen since 2008. And also the dollar index, well, late last year, in trade for us itself, it moved to around 112.8. It's closer to around 113 So we have a global challenge on our hands. The biggest trigger will be the rupee. Some stability out there is something that we're going to be looking forward to, because yesterday, clearly, with it slipping, it's south sentiment, and that's why the Nifty did come off the high point. Now, we ended high yesterday, mildly so. The India VIX, though, that has well moved up marginally. I'll keep an eye on the India VIX because you'd like that to cool down, and that's been the case for the last few days. But yesterday, it was a little bit higher. Institutional flows are good. The DI buying has offset the FI selling. So yesterday, the DI is bought twice of what the FI sold. And that's why you had a net institution buy number of close to 450 crores. The FI data, though, in the F&O market, well, that's a little bit cautious. After a couple of days of short covering, yesterday they added shorts yet again, close to 4,000 contracts on the short side. In the ratio of 2:1, remember, they continue to remain net short with a positioning at around 70% short. They wrote calls. For me, that's a bit of a worry. After a while, we're seeing call writing, and it was quite aggressive. Close to around 70,000 contracts is what they wrote on the call side. That, again, in the ratio of 2:1. And in case things go wrong, well, they have been buying puts. But that's a smaller data point. The call writing is a bit of a worry, particularly when we're getting into weekly expiry, which is today. On the Nifty and the Nifty Bank, I just want to pull out two strikes. Yesterday, we made a high at around that 17,600 odd mark. The 17,600 call, it has the highest open interest. The premium out there is around 23 rupees. So for all practical purposes, 17,630, that is unlikely to get breached, at least since we have weekly expiry today. And yesterday, it added more than 30 lakh shares. On the Nifty Bank as well, we went to around 40,600 and we did a bit of a U-turn from there. The 40,500 call has the highest open interest out there. Premium around 124. So you plug it in, 40,500 plus around 150, that's giving you a bit of a resistance. What are the levels you're looking at on the Nifty? Well, resistance zone 17,600, 17,650. A bigger effort will be needed to get us past that. On the downside, though, 17,350, that base seems to be moved up a little bit. So I'm counting on that level. Holding out, for starters, SGX Nifty is indicating a bit of a pullback closer to around that support zone.